I'd like to start by introducing our panelists, very interesting set of individuals. So I'll start with Victor Gonzalez, who's Managing Director of Xcalibur Smart Mapping Europe. Then Akin Omoboriowo, correct? Who is Chairman and CEO of Genesis Energy Group. Mohamed Mansour, who's Chairman and Founder of Infinity Group. And last but definitely not least, Amadou, Hott, who is former Senegalese Minister of Economy and the Special Envoy for the Alliance for Green Infrastructure in Africa at the AFDB. When I was thinking about how do I structure the conversation, I thought of a word and a term. So I'll tell you the word that I would like you all to walk away with when you think about this session, and the term I will tell you at the end of the session. So the word I thought of is contrast. I was born and raised in Cairo. If you haven't been to Cairo, this is the city of the most contrast in the world, in my opinion. Who hasn't been to Cairo? Can you see a raise of hands? You've missed a lot. So that's about 10 to 20% of the people. So I'll tell you 3 examples of the contrast you see in Cairo. If you are in the center of Cairo, you see the glorious River Nile. But if you drive only a kilometer to a kilometer and a half east or west, you see the Great Sahara. Huge contrast, very striking. If you go to the pyramids and the Sphinx, you see history of 7,000 years sitting in front of you. And 300 meters away from the Sphinx, if the Sphinx was alive, it would be looking at a Pizza Hut, just opposite to it. Huge contrast between consumerism of today and 7,000 years of history. My final example of contrast is I used to work and live in Cairo, and I used to work in one of the most high-tech professional office buildings in the country. And opposite to that office building, opposite a street that is not wider than this hall, was one of the poorest slums of Cairo. So when I was thinking about today's session, I thought about the same thing, the word contrast. 60% of the world's solar resources. Think about North Africa. Think about the wind blowing around the coasts of Africa. The resource is there, but the contrast is it's not fully utilized. 90% of platinum resources in the world, 52% of cobalt resource in the world, and between 30 to 45% of manganese, bauxite, and copper resource in the world. And the contrast is, how can we not utilize, upgrade, add value to these resources? So I'm trying to, I'll move to my panelists with this idea in mind. And I'd like to break our discussion today into 3 parts: the resource, the geopolitics, and then the funding. So let us start with Mohamed. The 3 most successful countries on the renewable sector front are Egypt, South Africa, and Morocco. Could you please tell us, what do you think, why this was a success story? Can it grow? And then the next part of the question, can it be replicated in other smaller countries or less progressed in the sector?
Sure. Thanks for the question, and thanks for having me on the panel. I think the success behind Egypt, South Africa, and Morocco is that the infrastructure is there in the country. So if you have bankable projects and you tick all the boxes, you can evacuate that power to the respective grids. That's not the case across the rest of the countries in Africa. Some countries better than others, but in general, we need a lot of investment in grid infrastructure to be able to realize this potential. And
would you, how do you prioritize other countries other than these three countries?
I mean, the need is definitely there. So whatever project we see that is bankable and has the grid infrastructure to be able to evacuate that power, we definitely are eager to pursue and see it across the finish line.
Is scale a problem? So if you find a small country that has capacity for 50 to 100 megawatts, is this an opportunity that you think is worth pursuing?
I mean, it's definitely good to put your foot in. I mean, that's obviously not the ambition. I mean, we'd love to do 500, 600 gigawatts of projects. But again, because of the grid constraint, we take what we can. And yes, we would develop a 10, 15, 30, 50 megawatt project for sure.
Thank you. Akin, power sector in Nigeria, huge puzzle, 240 million people, huge potential, very little generation capacity. How do we untangle this problem?
Yeah, thanks, Sameh. But first, you and I, we had a bet. So, Sameh Shenouda. So that means you give me $100 million. First, congratulations to Invest Africa. Thanks for inviting me on board. I think that for Nigeria, and a lot of people might not realize or remember this, the power sector in the country is 11 years young. In infrastructure world, that's a blip. Genesis predates that blip. We started off in 2005 in Guinea-Bissau, Ghana, and São Tomé. My experience is that the regulations in place in the country, the policies, the support from the government is very strong. Successive governments have prioritized the power sector, but they prioritized it to enable the private sector to take the lead. And so at privatization, the local institutions, DFIs, particularly AFC, yourself, and the local banks, bankroll that sector. There was very little equity that came into the country. So first and foremost, that's dysfunctionality, because there's no sufficient capital there. Second, of course, there was a perception issue around get rich quick. This is my very humble opinion, and I may be wrong, but my experience is that a lot of folks dovetailed what happened in the telco sector, where MTN, Econet blew up. The same thing was going to happen in infrastructure. But that's incorrect because this is social product. And energy is a social product. You're not going to get rich very, very quickly. But I'm very happy that I'm happier in recent times. The three things that happened. First is that there's been an amalgamation of all the myriads of regulations, the EPSL Act 2006, and everything has been put together now under one act called the 2023 Electricity Act. So that's important. So confusion is removed, clarity is given regulatory-wise. And the second thing, of course, is that now you have cost-reflective tariff. The essence of investment is to make some returns. You're going to take debt, you need to pay back, you're going to acquire equity that needs to have dividend and get that money back, and you need to provide service. It wasn't possible before because the investment needed, frankly, you have to subsidize the country, and the private sector cannot do that. The third, of course, is the negative play, which is the basis risk between the Naira and the USD convertibility issues, which made it almost impossible for anyone to bring in big capital into the country and hope to get it back. We built the first, the largest off-grid business in Nigeria in 2013, and 45% of that project was equity. Most of it is still stock in country. You have all of the CCI and so on and so forth. But very recently, we've been able to get that out just because of the recent policies of the government. So my sense is that in Genesis, we're more positive than negative. We believe that we're going to see scale. There's still a lot of headwind, negating growth within the sector. But from where we are today, from the past 10 years, I would say that we're more positive than negative.
Thank you. Victor, let's move from power to critical minerals. You at Xcalibur map resources in countries. So tell us a bit about your view of the critical minerals sector in Africa. First, in terms of exploration, in terms of mining, but then also the opportunity to go downstream and add value and beneficiation.
Thank you, Sameh, and thank you, Invest Africa, for inviting us here today. There is a huge opportunity. Well, as my colleagues here know, the energy transition is very mineral intensive, and we know that an electric car requires 6 times the minerals of a conventional car, or wind plants require also more minerals. And for us, it opens a big need in different areas of the value chain of the critical raw materials. And we are going to need more mines, more extraction, more exploration, of course, more processing. We have to be more efficient with everything, probably. And in our perspective, it has 4 important elements of development. One is regulatory framework, which is going to be the basis for everything. Second is going to be funding, which you said that we were talking about before, later. Third is information, data. Going blind is very complicated for investors and for any company. And 4th element is partners, because and going to the second part of your question, if you want to move along the value chain, you are going to need not only resources, you are going to need know-how, you are going to need trained people, and you are going to need long-term partners who help you develop the industry and to help you go beyond that and keep the value in the country. Because wherever we go now, we hear about local content, local development, bringing investment home, and it's important to find a partner which it's very tempting to get the money up front, but to have a long-term partner who can help develop the country, not only in the exploration side, also in the processing, recycling, other sides.
And do you think it's practical to really prioritize beneficiation in Africa? Does it make sense? Because when you are thinking about adding value to critical minerals, it's not only building a refinery or a precursor manufacturer. The whole infrastructure around it has to be there. The power, the road, the rail, the port, the water, etc. So is this, I know it's an obstacle, but is this something that is surmountable? And if it is it, can you do it in one go? Is it a phased approach? Do you start with the infrastructure first? Do you start with the factory first?
No, you are absolutely right. I mean, in fact, when we finish our projects, we try to explain to the governments or to the regions that there are some potential areas or target areas, because the focus of the development has to be on those areas, because it's not so easy to go anywhere where there is potential, because in some places you have no infrastructure, you will take probably, I don't know, 10, 20 years to develop that area. But on the contrary, there are other places where you can be there faster, or you can develop it quicker, or you can collaborate with those partners to prepare that region, that area, that location to produce some results in the short term, well, short, medium term. And this is part of a smart beneficiation, if you want, because you cannot go everywhere and say this is going to be easy, but you can identify selected areas and you can focus on those areas and put investment on that area.
Thank you. Amadou, you'll have to excuse me. I will be asking you all the difficult questions today. So we can't talk about resources without talking about oil and gas.
Sure.
And I know that it is a very sensitive topic for some. It is not for us at AFC. And the very simple reason is that if a country is endowed with oil and gas, it doesn't make sense for it not to use responsibly that resource because it helps with the economic development, it reduces carbon emissions because of it just doesn't make sense for a country like Nigeria to export crude oil and import refined products. We cannot just comprehend it, and we're not going to accept it. It just doesn't make sense. We talked about cooking, for example, wood. It doesn't make sense that we have gas that is being flared, but also forests that are being chopped. And you say, sorry, you can't use that gas. So it's a leading question, but what is your view on the oil and gas as a resource that Africa is endowed with?
Thank you very much, Sameh. I don't think it's a very difficult question because you said it. For us, what's important actually is to ensure that countries have access to electricity. For example, in Africa, more than 600 million do not have access. Clean cooking, more than 900 million do not have access, and you have negative also health issues as well associated with all of that. But as you said, you need to use your resources also responsibly, whether it's your oil and gas resources or your renewable resources as well. But in my view, all countries, not only in Africa, around the world, for access to electricity, you should try to maximize the use of renewable energy, maximize it depending on cost, especially for Africa, but also depending also of the time as well it takes to develop some of these projects. And then third, for industrialization, today for Africa, it's not practical or economically viable to use actually, for example, green hydrogen because the cost is still relatively high. So if you have gas, it makes sense to use that gas to support industrialization, to support the use of fertilizer as well, to support the use for clean cooking. Because for clean cooking, it's so obvious that using LPG, I believe that makes sense because you are going to stop trees being cut. And that has a very big impact on actually the environment, and the emissions are much bigger than the small emissions that you will have by using, let's say, LPG. And third, the International Energy Agency came up with a study about a year ago, I think a year or 2 years ago, I was minister at the time. If Africa were to use the 5 trillion cubic meters of proven gas reserved, but not exploited yet, 5 trillion cubic meters, it's huge. The impact on emissions would be only 0.5%. So Africa will be still under roughly 4%. So shouldn't we use that gas when in fact using renewables maybe is not making sense or the cost is not there? And I think that is absolutely important, and in particular for industrialization. We cannot continue to export raw materials and not adding value. This is very dear to AFC, and my brother and friend here, Ismail, is here, but also to the African Development Bank. President of the bank always says, the higher way, the auto route to being poor is really to export raw materials and then import a manufactured product. That is the fastest way to keep continuing being poor. And I think industrialization here is absolutely critical, but let's maximize the use of renewable energy. Whenever it makes sense, that should be the top priority for everyone.
Okay. I'll stay with you and ask you a harder question because your answer was very good on this one, so you've studied well. I could talk about for half an hour about geopolitics, but let me just paint a picture for everyone here. You have a war in Ukraine that's been ongoing for a year and a half now. And this has led to what I call the 3 Fs in Africa: food prices, fuel prices, and financing cost. You have a war in Gaza that has humanitarian political implications, but also has economic implications on Africa, on actually my country, where the Suez Canal has lost 40% of its revenue in the last few months. So there's a direct implication on Africa. You have a tension between the US and China, whether it's around Taiwan, around trade, around critical minerals, etc. But then that's not it. You have an election coming in the US I'm not going to mention which choice makes sense because it's a bit shocking, but this is something that will impact Africa as well. You have an election here in the UK. And these are the things that really are the big things. You have an election in India, you have an election in Mexico that just finished. But then within the continent, you have 8 coups d'etats that happened in the last 12 months. Sorry, 9. One failed a few weeks ago. You have many elections, South African elections, not surprise, but unusual outcome. And if you look at the map behind us, Africa is smack in the middle of everything. So what is your view as an ex-minister, as one of the senior leadership of AFDB? Where does Africa fit? How do we manage? The only constant about the geopolitics today is that nothing is constant. Everything, all the parts are moving. So from your experience, how do you see Africa and how do you manage that? How do you deal with it?
This is a very important question, and I think all policymakers in Africa are really trying to make the right decisions, taking into account all this volatility. You know, you have pros and cons. I'm going to be a little bit cynical for my first answer, you know, on the impact of this geopolitical in Africa. Because of the war in Ukraine, you had an energy crisis in Europe, right? And because of that energy crisis in Europe, it have become more acceptable, for example, for Africa to use its gas and to develop it. Because until then, there were a lot of talk that we will not finance, let's say, gas overseas, but we'll finance it at home. I was in Saudi 3-4 weeks ago, and there were a panel where the Saudi Minister of Energy will ask a question. Why exploiting gas is kosher, is acceptable in developed countries and not acceptable in Africa, right? And you know what the Saudi minister said? He said, ask the Mufti. You know, the Mufti is, you know, a scholar, you know, in the religion, in Islam. You ask them actually any question, they tell you do this or do that. So which means that it's a very difficult question. I think that question, even the Mufti cannot answer it, right? and just to say that because of that geopolitical tension, there is a shift a bit in terms of exploiting your natural resources, exploiting gas, using it in a very responsible way to give access to electricity. Because for the first time, the more advanced economies realized how critical it was to have access to electricity, because people were scared that they would not have access to energy. And so all countries were doing everything they could to provide their populations with access to energy. And this is also what the African governments are trying to do, is just pushing to give access to electricity, but in a very responsible way. So that was one impact. Let's forget about that answer, right? And then second answer that we should remember is that because of that war, oil prices went up. You talked about the 3 Fs. And because of those 3 Fs, African governments also and leaders opened up their eyes and said, Jesus, we cannot depend anymore on Russia or Ukraine for our fertilizer, for our wheat, and for our cereals. So let's now have plans to really put food security on the map. Today, ministers of agriculture in Africa are superstars. They are now the most important ministers in Africa, ministers putting food on the table. Anything that they ask for, the government will provide them. The ministers of finance now are taking agriculture ministers very seriously. They realize how that can impact actually the country, the finances and everything. I think on that front, it was a positive. The big negative is, of course, inflation. Inflation went to the roof, not only because of the war, but it's also because of aggressive monetary policies during the COVID. If you combine those two, inflation went very, very high up. Central bank responded. Both in the US, in Europe, interest rate went to the roof. Between January 2022, I was minister, the SOFR was around 0.05%. the Euribor was negative. And today, they are both around 4.5 to 5%. So the cost of financing has become so big that the countries that are in debt vulnerability or debt distress are much higher than before. Cost of financing has gone up drastically. And budget deficit has gone up also because of all those reasons. And then also, of course, debt has increased drastically. As a policymaker, we focus on domestic resource mobilization then. Three pillars. One is on mobilizing taxes. Second, getting value out of our assets. We lose a lot of assets and don't get much value out of our assets. And then number three, building the local capital markets, like what the President Additional said this morning. And then final is really drive industrialization, produce more locally, produce food locally, so that we are kind of immune from what is happening from outside. Because what's happening from outside, we don't control it. There's nothing we can do on all the geopolitics outside. What we want to make sure is that internally, that we have the strength that any shock that comes, we can absorb it. And the biggest thing is that to mobilize domestic resource, transform your own assets locally, your minerals, your agriculture, with the agropoles we are doing at the bank, so that actually whatever happens outside, you can manage locally.
Yeah. Thank you. Good answer.
Well, thank you.
So as business leaders, how does geopolitics affect your strategy, your policies? I know that actually some multinationals today are creating a new department that is only covering political analysis, which is an interesting development. So it's an open question, whoever of the three of you wants to volunteer. The impact of geopolitics on you and your business, how do you take it as is it an opportunity, is it a risk, is it both, and how do you manage it on the ground?
I think for us in Genesis, we see it as great opportunity. We're not political, we're not interested in politics, we're businessmen and women. The notion of self-reliance, which is what my brother Amadou spoke to, is very important, but it's a long game. So you're not going to industrialize in 1 year. That's not going to happen. But what can happen, and this is why I believe very much in partnerships. You can't do it alone as Africans. You can't do it alone as a Nigerian, as a Beninois, whatever. You have to speak to the ecosystems of friends of the continents. And you know, Africa is 54 countries. It's not one country. And even in one country, there's a whole lot of different interests, different languages. So to the extent that you have this global geopolitics that you cannot control, very correct, but the fact remains that there are opportunities that appeal to my sector. For example, there's always going to be very competitive priced solar systems from China. Genesis gets a lot of capital from the United States government. 5 years ago, they guaranteed our bond unconditionally and irreversibly. Today is one of the best performing bonds in the country. I have no interest in any one of these two countries beyond delivering on the vision that the shareholders of my business has given me, and of course, serving the interest of Genesis vision, lighting up Africa. So to the extent that you have these global tensions, of course, cost of capital is higher, access to your equipment is also gone up, but the system absorbs it. Ultimately, energy is critical. Whether it's cheap, whether it's expensive, we have to buy it. Today, sub-Saharan Africa is reliant mainly on very expensive diesel. Even the common tailor on the street pays for it. And if you bring solar solution to the lady, for example, you bring it at a significantly lower cost. So irrespective of the cost of solar systems, my price point delivered to my customers at a point of use is significantly cheaper. So we have to focus, as an economics, we believe that do not let a good crisis go to waste. This is a great crisis. Mm-hmm. So milk it positively.
Thank you.
Absolutely.
I think, to maybe add to that, I see the geopolitics as an opportunity for the continent, and where I see the big opportunity is in localizing the supply chains. I mean, I'm in the energy sector, I do renewables. Energy security to me is being able to manufacture these components in the continent itself, be it Egypt or elsewhere. And that's how you can, have that energy security, be able to build out these plants in the future. Because today, Chinese are flooding the market with their product. They're happy, they want to gain market share. Who knows in 3, 5, 10 years if that tap is closed and you cannot source the product. And we saw that in COVID, and I think that's something that we should all collectively work towards, for sure.
And what's the challenge do you see? I mean, whoever is currently supplying these, whatever equipment, raw materials, they're not going to sit quietly seeing you build the supply chain on the continent.
No, the challenge is, it's not a challenge, actually, it's a very logical business conversation. You go to these manufacturers, you say, come partner with us in continent, and let's produce this together and make money together. I don't want to take the technology and do it alone. We want to get best in class in continent and have that manufacturing facility on the ground.
Interesting. Victor?
Well, for us, geopolitics are going to be always there, because now we have problems, but a few years ago we had other problems. I mean, they are always there. So we adapt to them, and well, for our business, we are not fixing one country with specific problems. So we try to be flexible. We manage to balance the position and to adapt the proposal to. You were speaking before, autonomy of supply is now the word. So we manage that idea, and we try to stay positive, as Akin was saying before, because at some point this is the only way that we can move forward.
Thank you. So let's move to funding. You are 3 businesses and 1 funding, one financial institution.
Well, 2, actually.
2. The question is, the cost of funding has gone up. Africa is not on the radar screen or on the map of many international funders. How do you manage to attract funding? How do you manage to grow your business? And what are the key challenges, and how do you go about them in terms of raising funds? So let's start with you.
Well, we try to be part of the solution. Okay? So when we approach a client, of course, we have our technical proposal, technology state-of-the-art, high resolution data. We have all these technical parts, and we try to help with the funding alternatives. So we offer different models, and we try to de-risk the investments. So when we are offering data, we try to make governments mostly able to attract investors from outside. And let me give you an example. A few years ago, in 2015, 2017, we mapped Angola, and we identified the structure of the copper belt, which was in the country. And with that information and that data, the government of Angola brought major mining companies on the table willing to invest and willing to finance the country somehow, to make investments in the country. We are going to continue that work in Zambia and DRC now, but this is an indirect way, if you want, to attract investment, to attract funding in the country, because if countries compete against each other for financing. So if you have better information, you have better data, you can attract better investment.
Thank you. Akin?
Yeah, well, I mean, attracting investment in this climate, I think, has become tougher. My sense is that I have 2 comments. One is for fantastic organizations like AFC. You guys are doing great things. But charity begins at home. I'll appeal to you, and I'm glad that my brother Sameh is also here, that blended finance is critical. There has to be more dynamism around funding. I believe in democracy of funding. Mm-hmm. And to do that, you need to support the middleweight. In every economy, the SMEs is the core of the economy. It's not the big boys or the big women. It's just those middleweight. And unfortunately, a lot of them do not have all of that financial capacity. So if we have to take a commercial view to development sector, which is really mostly what I see, I think it's going to be very challenging. So we're all going to talk a lot, but we're mainly going to pick the cream of the crop of projects. So if we believe in Africa, and if we're taking a long-term view, there's some risk that we have to say that we have to take. And those risks, frankly, I'm in Africa, I'm going to die there, mainly. So if I'm investing in about 9 countries now, with our little capital, we have developed substantial project, contracted about 560 megawatts. We're building the first IPPs in 4 countries, again with sole source capital. And we're very grateful for the US government, again, who has now come up and partnered with us to catalyze and deploy $10 billion. The essence of that $10 billion, and already, by the way, this year alone, we're jointly catalyzing about 380 million for specific project. And they are taking some real risk, as well as providing enablement. There's some things Genesis is very weak at. There are other things that the government would like to contract. For example, national utilities are not credible. Some of them are not. The USG has decided to stand behind and issue me the payment guarantee that I can come to you, Ismail, I took my raise money. But it would be great if my brother Sameh says to me, you know what, I don't need USG's guarantee. I'm going to take the risk, credit risk of specifically ZESCO. I know that ZESCO is not going anywhere in Africa. I will stay there with you for the next 30 years. If we can achieve that sort of thing, I think we can do more.
Ahmad?
I think the biggest issue with the funding is the risk perception, obviously. And I think it's not really accurate. I mean, the point was made earlier in the earlier panel that risk perception is there because people don't really understand the African market. I think that's the main issue. In my opinion, risk is global. I mean, you have a war in Ukraine, right? You know, on the borders of Europe with Germany and Poland. So it can happen anywhere. You just need to, again, find the right partners in continent that understand the different markets to be able to realize these projects. I mean, we're lucky to be partners with you in AFC in our project, Sameh, and we look forward to work with AFDP. I mean, you're institutions that understand these markets. A conversation is a lot easier to raise debt and, you know, equity in some cases with these projects. And I think that's the major hurdle.
Thank you. Amadou, you're the guy with the checkbook.
I will focus really in few minutes on the importance of project preparation and project development. We are talking about billions to trillions mobilizing private sector money. But if you don't have enough bankable projects, we will not make it. All the DFI that are in this room, they know that when there is a good deal, a bankable transaction, there is no problem to raise the equity, there is no problem to raise the debt, no problem to provide any instrument that it requires. That's why the African Development Bank and Africa 50, AU, and other partners started what we call the Alliance for Green Infrastructure in Africa, that aims to mobilize $10 billion in private sector investments in green infrastructure by mobilizing $500 million of project preparation, which is 100 million grant to the public sector, because everything starts with the public sector. The vision, the strategy, the plan to execute. So if we don't have that, then there will be no project. Once you have that, you identify some project that you want to execute with the private sector. The government doesn't borrow here. That's why we said, let's have a $400 million blended finance facility to work with developers like Africa 50, AFC, Global X, and many others, you guys, to provide you with the expensive money so that you can develop more projects and increase the size of the projects, the number of projects, and then once you have that, then everybody can work together to finance it. And today we've mobilized so far almost $300 million, with about $160 million coming from G7 countries. We were in Strasser last week, it was in their communique, and we're hoping to do the first close in September and start co-investing and exiting those projects at financial close and let the equity and debt providers to come on board and then reinvest part of that money and then distribute also to the shareholders. So we have here African institutions, putting their money with AFBD leading with $40 million, including $20 million of grant, and then having also the Africa 50, of course, the Badea, the Beowade, philanthropy, the G7 countries, OFID fund, and others, so total roughly $300 million for a first close on a facility of $500 million.
Thank you. We've almost run out of time. I want to ask each of you, I'm assuming that you want to double or triple your business in the next few years. What is the first word, one word, to think of when you think about the opportunity to double your business, and one word on the biggest risk you want to avoid? Who wants to go first?
Partnerships.
And the risk?
Cultural risk, Africa.
Interesting.
Okay, I'd also say partnerships, key. The risk is the infrastructure, grid infrastructure development for my growth plans.
Actually, I'll give 3 words, if you may.
No.
No, 3 words, 3 words, very easy. First of all, it's the impact, because this is what we do. Number 2, credibility of the sponsor, that they can deliver that impact. And 3, that the projects are top priorities of the governments. You don't want to chase projects that are not really a top priority of the governments. Those 3.
Okay.
For me, I agree with that final point. First, priority. This is the main point. Risk, I could say funding, but related to priority.
Thank you. I want to thank the panelists here by telling you, I told you at the beginning, I'm going to start with one word and one term at the end. The term I started with is contrast. The term I want to end with is commonality. What is common about the 4 individuals here, and I thank you for being here, that they are on the ground and they get things done. And because of people like them, institutions like them, that contrast that we talked about at the beginning, that gap is going to shrink and is going to close. Thank you very much.
Thank you, Sameh. Thank you.